So next we're going to discuss the other major group for setting standards. The group is the IASB, International Accounting Standards Board, and it's comprised of countries all around the world. And they've come up with their own standards compared to US GAAP and different from US GAAP called IFRS, International Financial Reporting Standards. And the question is it standard? Answer, sadly, is no. Sadly, because I think we all agree that if we had one set of rules and procedures for all countries and companies to operate, that would be better. But as a practical matter, we haven't. There are differences between GAAP standards by the US FASB and the standards set by the IASB in the IFRS. So therefore, those two groups have not gotten together and not agreed on one global standard. So the global adoption looks like this. This map has colors, and you can see in the dark gray, US and other countries such as India have not adopted IFRS, whereas other countries, like the ones in the various shades of green, have adopted IFRS or are close to adopting IFRS. So you see there's no unanimous standard right now, and it's something the SEC wants. I think we as global corporate participants want, but it's just not happening yet. And the SEC and the FASB have agreed to move to what we call convergence to bring those standards of IFRS closer and closer to GAAP so that eventually we will have one standard. Just to look at some of the differences that belie this controversy or this difference of opinion is US GAAP looks at rules as their approach to handle the standards. IFRS is more principle-based, it's more general-based. The statement format for GAAP looks like the following. Balance sheet has an order based on liquidity, current before non-current. For IFRS, they go the other way. So non-current is before current. So that's the order of presentation in the balance sheet. That's probably more where you'll see it. There are slight differences in other statements, but it's very prominently different in a balance sheet. The inventory cost flow for US GAAP, an approach called LIFO, is acceptable. Last in, first out. Under IFRS, it's not permitted. They use FIFO, which is first in, first out. In the US, you use FIFO or LIFO. In IFRS, it's only FIFO. So it seems like just a battle of acronyms, but that is a point of difference. Next is inventory previously written down in value. In US GAAP, you can't write it back up. In IFRS, you can. So that's a disagreement. And R&D, another example, is we generally write off any expenditures for R&D in the period in which we paid it or incurred it. IFRS allows certain developmental expenses to be capitalized and put in the asset section. So these are some of the technical differences between GAAP and IFRS. They may not seem like big deals to you or me at this moment, but there's enough to stop the convergence. There's a match game on reporting and oversight, and again, you'll see this given to you with your instructions for this lesson, and go ahead and try out and see how you did on understanding these standards and oversight.